My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks, and let me ask you this. Are you in one of those kind of professions where it's really kind of difficult to leave? Like, are you an engineer? Are you in the sciences? Are you in something like that where, those golden handcuffs are really kind of difficult to let go of? Well, if so, then listen up close, because today's special guest zooming in from San Diego, California is Wangzhong Sheng, who is a scientist turned full-time real estate entrepreneur as of January of this year. And he's involved in a variety of different things with real estate, a lot with syndications these days, as well as an exciting new venture that has to do with accessory dwelling units. So, Wang, welcome to the show. Great to have you.
Thank you so much, Dave. Happy to be here.
Give us a little snapshot. What does real estate investing look like coming up on September 2024 for you, Wang? What does your real estate investing business look like today?
Yeah, great question. I a little bit of background. My background and training is as a pharmaceutical scientist. I got into real estate investing in May of last year when I picked up Brandon Turner's book on real estate investing. Got me into it. And
so for folks who aren't familiar with Brandon Turner, he's the guy, I believe, who started Bigger Pockets, or one of the big guys in Bigger Pockets. Got it.
Yes, very, very educational, inspirational book.
Yeah.
But I essentially took those principles and just applied them in a broad approach because my philosophy is I learn by doing, right? And so I did a bit of everything. I did my
you experimented. You
experimented
in real
like
estate.
A scientist, right? So I successfully completed a flip over in Indiana. I bought a fourplex that I'm performing the BRRRR method on in upstate New York. That's going well. It's bringing in rental income right now as I'm rehabbing it. I bought a duplex locally in San Diego. That's kind of how I got into the ADU space. I'll talk more about that in a little bit. But I also invested as a limited partner in a couple of deals, actually 3, kind of geographically diversified across the country, right? We always talk about diversification, and diversification is, the way I think about it, is not just in asset class, but also in geographies, right? So I invested in Oregon, Missouri, and Arizona. So a little bit on the West
multifamily
Coast.
syndications, or different kinds of
different kinds. One is a multifamily syndication, one is a condo conversion, and another is a little bit of a ground up construction, longer term play, but a little bit more risky, but also higher returns. So I like to diversify both in terms of the asset type that I invested on geographically. And I naturally gravitated a little bit toward the multifamily space and started syndicating my own deal. So I've been working on a deal in Detroit, Michigan. It's a 61 unit portfolio purchase, Class C Section 8 housing, with some local partners. And we've been working on closing that deal. So
very cool. So what is that so it's not one property, it's a whole bunch of properties?
Yeah, it's a portfolio. It's an apartment building, 2 sets of townhomes, and 6 duplexes.
Okay.
Yeah, mostly 2 bedroom, 1 bed, 1 bath. Decent neighborhoods in Detroit. I flew out personally, saw the properties, really liked them. The economics there are just very different from what we see here in San Diego, right?
Yeah, night and day for sure.
Night and day, extremely strong cash flows. But but with it comes its own challenges, right? You're probably looking at a little bit of a more challenging tenant base, things like that. But that's why it's critical to employ and work with local partners and reliable partners.
So as a GP, what's your role in the deal?
Yeah, my main role has been deal sourcing, fundraising, basically everything leading up to closing. And then I think after closing, obviously I will still be involved, but likely to a reduced capacity, just because I'm not local. I'm not able to offer that, boots on the ground, hands-on support. But that's where my local partners come in.
So the local partners are doing property management and tenant management. What's their role going to be? To hire out to a property management company.
Yeah, to start, we are outsourcing to a property management company.
So what are these guys going to be doing then?
Well, they are Good question. Well, they're interfacing with the property management company overseeing the construction and the rehab work.
Okay. Yeah.
They are, a lot of us, like as GPs, we all have to start from somewhere. So some of us got together and they're in it a lot for the learning experience, but also they're doing projects on their own, with their own investment
Got it.
opportunities. So
Yeah. No, I just want to make sure that because to me it sounds like you're doing most of the work. It's like got to make sure. I've been around the block a few times,
yeah.
Wang, so I understand that partnerships aren't always exactly what they're cracked up to be on the outset. So
No, I hear you, but it's also a team sport, right? And it's
yeah,
important to have, boots on the ground, eyes on the properties locally, even if we are working with a property management company.
yeah, most definitely. Well, yeah, they've got a lot to do with the rehab side of things. That brings a lot of value to the table. Interesting. So you were talking to me a little bit off camera about an exciting new venture you're getting involved in with ADUs. So tell me a little bit about that.
Yeah. So I recently, as of a few weeks ago, I joined a company here locally called ADU Pals, PALS, like your friends.
Yeah.
Um, so the story there was I bought a duplex in an area in San Diego called City Heights. Excuse me. It's an up and coming neighborhood, but with a lot of development potential.
Mhm.
So what I liked about the property was that it was almost evenly divided in half. There's two units on there. It's a duplex detached. There's a front house and a back house. And my vision for the property was to take the back, tear down the garage and carport, build a two-story ADU in its place. So going from 2 to 4 units in phase
Mm.
one of the project. And then in phase two, tear down the smaller front unit and build a fourplex in its place. So going to 7. And a lot of people ask, wow, how are you able to go up to 7 units on like a 5,000 square foot lot? That's where San Diego and its local governances come in, right?
Yeah.
Because we have such a critical housing shortage, the city really incentivizes us leveraging bonus FAR floor area ratio to build the units to create affordable housing for lower income families. So if you deed restrict half the units, so when the property is complete, of the 7 units, if I deed restrict 3 units, I'm able to
What
build.
does deed restrict mean?
Deed restrict means that you can only charge up to a certain level of the median average median income for
Okay.
families, average median income, and then 30% of that as the rent. So for example, if it's a moderate level based on San Diego income levels, you can charge up to $3,000 per month,
Mm.
which is, it's not really going to affect you too much versus if you restrict it even more to lower or super very low income, then you're maybe capped at 2,000 or 1,500 a month, which significantly hurts your income generating potential.
Yeah, most definitely.
So
Okay. Very cool. So how does that tie in with the Pal
yeah.
guys,
So sorry,
ADU
I
Pals?
I got a little digression. So long story short was I initially hired a company out of San Diego in the NorCal area to do the project for me. But it quickly became apparent, because they're out of state, they didn't understand a lot of the local governances, and I had to
Mm.
do a lot of the research myself. And I ended up connecting through a mutual contact with this company, ADU Pals. They were actually founded in November of last year, so they had not been around when I was starting this process, which is how I wasn't able to find them. But long story short, we quickly got to talking. I really found they really knew what they were talking about, and they were able to give me a more competitive quote on the project. So I ended up switching companies to ADU Pals. And long story short, as we got to know each other, we started working together. We became really good friends, and then eventually, actually business partners. So now I'm officially part of the ADU Pals team as the CFO, Chief Financial Officer. We have a team of 4 of us and a architect we recently hired. So it's a fully fleshed out team to build ADUs. So
Very
it's
cool.
pretty interesting how those things evolved. I went from customer to friends to business partners.
So as a scientist, what has been your eureka moment about getting into real estate investing, especially as a full-time real estate entrepreneur now?
Yeah, again, great question. I think it's just seeing the marketplace and seeing, you know, what's happening macroeconomically with inflation, with all that, right? With scientists and getting, I spent 27 years of my life in school getting a PhD, right? And the whole idea was just like a lot of people who go after an MD or others, it takes even longer, right?
Yeah.
The idea is you go in, you get the higher income, and then you have that income sustain you. But with inflation where it's at, a six-figure salary in San Diego really doesn't mean much anymore nowadays, right?
that
You
that's rock bottom minimum kind of just
Yeah,
get along. Yeah.
you're barely getting by, and then meanwhile you're looking at people in tech, people in finance, people in other industries who spend a lot less time, on education, getting to the same level, if not more, and seeing a lot of my fellow coworkers, struggling to make ends meet while
Mm.
making a six-figure salary in San Diego, really just like was eye-opening for us. We were like, we had a couple of situations last year. Well, we bought our house fortunately during COVID. A couple of friends of ours told us, we're like, hey, you should really think about buying a house during this downturn,
Mm.
and when the interest rates were low. We were very naive. We didn't know what we were doing. We put 25% down, and luckily we bought our house because we were able to get
Yeah.
in at below 3% on our primary residence.
Hmm.
It's a townhome, which ended up appreciating.
Yeah.
But if we hadn't talked to our friends and seeing how much real estate and life-changing real estate can be, we would be like some of the other people who are now locked out of owning real estate
Yeah.
in the city of San Diego. So anyways, long story short is we ended up buying that house and it appreciated quite a lot. And we were able to set up a HELOC and use that money toward putting into further use. And just with investing, right? Like if you take make risk adjusted investments, you're able to snowball and roll that money into more investments and really try to outpace inflation. So that's kind of
So
what started all
so
this.
with that 27 years of education and your mentality as a scientist, what advantage does that give you in the real estate world?
I think the biggest advantage or the thing I learned is perseverance. Um, to get a PhD is a long, long, long commitment.
Mm.
And
Yeah.
part of getting a PhD is not really the topic you research on, but the perseverance to stick with it and to see it through. And I think that's very applicable in anything you do, right?
Hmm.
But interestingly, I think one of the disadvantages, I know this is not what you asked, but one of the disadvantages has
Yeah.
been being a good student, right, academically. You're taught to always be perfect on the first go, right? Try to get 100 points, try to get that A+. But out in the real world and in business, it's very difficult on the first go because you don't have study materials necessarily always, right? You don't
Plus,
have,
plus,
here's
plus, there's
materials,
a lot
remember
more
it.
variables, right? There's
A
a
lot
lot of
more variables.
yeah.
And that's why they say, right, a lot of entrepreneurs are, or if you look back on their education history, they were bad students in school because they learned how to fail properly. And I think
Mm.
that's a disadvantage being someone who's academically inclined to come out and try to do entrepreneurship. I've always been, entrepreneurial spirited, but I've had to rewire my brain and learn to fail properly and fail over and over again because in school, right, it's not taught if you're academically inclined how to fail.
I think Robert Kiyosaki wrote a book a few years ago called Why A Students Work for C Students and B Students Work for the Government or something like that.
Sounds about right.
Yeah, very, very interesting. Well, I think another big advantage you bring with your skill set and your natural abilities is the analysis and the number crunching side of things and that cold analytical view of things, like really studying the numbers versus, I don't know, maybe you do get a little bit emotionally caught up in things, but some folks, myself included, who aren't as numerically gifted perhaps might tend towards the gut feeling and the emotional type of thing, which I think is a big mistake. So I think that's another superpower that you probably bring to the table.
Yes, thank you. Thank you for reminding me of that. So
Yeah.
sometimes
Yeah.
I forget about that just because I am so naturally inclined toward
Yeah,
being
it's just second
analytical.
nature to you. That's for
Yeah.
sure. No, that's wonderful. Hey, Wang, time flies when we're having fun. If somebody's listening or watching this and they want to connect with you, where should they go?
Yeah, you can find me on LinkedIn. I'm pretty active on there and I have a pretty unique name, so you should be able to find me relatively easily. But
You're saying
also,
there's only one Wangzhong Sheng on LinkedIn, or
I
not very
think
many
so.
of them?
Last I checked, I always come up as the first result. But if it's not on LinkedIn, you can always, reach out to us at ADU Pals. We're in San Diego building ADUs. So
Awesome. Well, all the best. Congratulations on leaving a lucrative W-2 and making a go of it as a full-time real estate entrepreneur. Good job.
Thank you. Thank you. Exciting road ahead.
All right, everybody, take care, and we will talk to you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.